Hello everyone and welcome to another Elliott Wave Forecast video a day. My name is Eric. Today is the 2nd of May around 3:55 p.m. Eastern Times, and today we're going to take a look at the S&P and how the S&P has been seen by Elliott Wave Forecast over the last month and a half. As always, we're using the new, what we call the new Elliott Wave theory, and I hope everyone to understand that the Elliott Wave theory was created or developed back in 1930s, and since then it's almost 100 years old. So what we have done in Elliott Wave Forecast is create a lot of new tools that allow us to not get trapped by the market when a sequence is incomplete, and not get excited and keep the members out of the trap, right? Having said that, let's open the mind and take a look at how we saw the S&P back in late February, late March, and how we see it for the future, right? So before we're going to start explaining to you guys here what is an expanded flat. An expanded flat in the Elliott Wave theory is a structure that is very dangerous. Why? Because it's a structure that if you look, you have right here, this is a bullish expanded flat. And this way, the market comes from here, the market does 3 weeks pullback, 3 weeks higher, and then it makes a strong reaction lower that is going to make the sellers in this case encouraged, right? Because they see this peak and then they're going to say 1, 2, 3, 4, 5, and they're going to be selling here. Again, this is a flat that is, the C weight is lower, so technically in this case is a bearish market that it did coming from here, it moved lower and it reacted higher, and then the sellers, after seeing this reaction at this peak, gonna sell over here after 3 weeks back. But the market rally and ending breaking this peak down the road. The S&P back on right here back on February the 23rd, we noticed in Elliott Wave Forecast that the S&P did something very similar, but in this case, it was a connector within the bearish correction. The one that I show you is a connector within the bullish correction, right? So from the peak in January, the S&P did 1, 2, 3. That makes 1 in red, 1, 2, 3 in blue. That makes 2 in red, and that makes 4 in black. If you notice here, this is sequence, guys. There is 3 degrees or levels. The black 1, 2, 3 makes 1 in red, 1, 2, 3 in blue makes the 4 in black, but also makes the 2 in red. Now, at this stage, when the market reacts, eventually coming out of the lows that happens on February the 23rd, our first intentions was that we call it the market to reach the 40-40 area more or less from here. We were pretty close to the 100% extension coming from the peak between, at that stage, these 2 highs, this low and this high, the 4,000 level at that stage was the ideal level to buy the S&P. But the market didn't want to do that, right? So the market reacted and started to extend higher. At that stage, the waivers, they technically have 2 options. Either you call the correction completed here, right, and you start a new cycle to break the highs, or technically you call an expanded flat, or you have 3 options technically. You call the correction completed, you call the expanded flat, or you put the W in this level, right, in case that you want to be bearish, and you call it lower. In Elliott Wave Forecast, like I said earlier, we have added a lot of tools to the theory, right? And one of them is this sequence that we follow and we track for each instrument. And one of the new rules is that when you have a low, like the February the 23rd, in which you have 3 down, 3 higher, and then you have 3 down right here. Technically, you can call this a 3-way move up to here. This low needs to erase momentum divergency against the previous low. If we add the RSI sequence right here, we see that this low do not have it comes with momentum divergency against this low, which we knew automatically when we saw the market reaction over here on around 316. We knew automatically that the market was doing a trap. We told members, we told followers in social media many times. You guys can track our handle. We've been showing the flat, the running structure, or in this case the standard flat. We were showing the idea in social media day to day. Eventually, we were right. There was divergency here. It was a trap, and this is how we showed the chart to the members back on March 26th. At that stage, it was clear that it was the expanded flat that we have 3, 3, and 5, and it was clear that we were telling members that around 46.40 area, more or less, below 48.16, the market eventually is going to turn lower and it's going to reach around the areas that we are now, right? So it's a very nice way to identify a trap in the market. As always, the market is full of trap. And in this case, now, from the March 30 peak, we have 1, 2, 3, 4, 5. That makes 5 in black, 6 in black, then 1, 2, 3, 4, 5. And eventually, we're going to go and we're going to get, sometime this month, the string area that is going to finish right here. A 7 swing in black and 3 swings in red to finish the sequence that we were expecting since the beginning, or technically since the middle of March. The market stayed the whole month of April, technically since here, up and downs, but at the end, the sequence and the new Elliott Wave theory that we use it, the way we use it, the rules that we add, in which we have this low with divergency, allow us to identify the flat and allow us, our members, not to get caught in the trap of buying the indices around this area. I really hope you guys understand the main idea, how the theory had changed, how with the momentum indicators, now we can locate traps, and how we were able to identify and expand the flat ahead of the market and not get caught in the trap using these new rules that we use and what we call the new Elliott Wave theory. Hope you guys will enjoy it. If you enjoy it, I invite you guys to take the 14 days trial. You won't regret it. You're going to get a lot of blue boxes like the one shown in this video, and subscribe to us, and you're going to be a better trader if you're willing to learn how the market moves and how it can be traded in 2022. Thank you all, and have a good day.